Welcome to this channel, traders. Some of you have just joined this channel and you find me talk about this PDF and you don't know what it is all about. I want to give you a simple explanation today. This PDF, traders, is just all that you need. It is a guide on when to take trades, on which pair and at what time, because the first thing that is very important in Forex is knowing when to trade what. Let's take, for example, WTI. So for oil, you are supposed to trade it from 8 a.m. if you are using GMT plus 2. So you are supposed to trade it at the end of the Sydney session, because it will make that long move from this grayish box, which is the Sydney session. You are very much likely to find perfect entries. Okay, you see that it is ranging within the box, but from the moment it gets out, it makes those huge moves. So that's the reason for finding a specific time to trade each and every pair. This PDF helps you on that. As you can see that you have different times for all these different currency pairs. Now the second thing is the strategy. You cannot have a strategy for everything, one strategy for everything, because the pairs move differently. Okay, so this thing gives you the strategy. For example, just the WTI that we made an example on. Let's go there. You mark the highest point and the lowest point of the Sydney session as your upper and lower key levels. If you don't understand this explanation, you just click right here. To find an entry on crude oil or WTI, you just wait for the Sydney session to end. Once that session has ended, you just highlight the highest point of that session and you highlight the lowest point within that session. I'm going to put it here because of that week. Once you have done that, wait for price to either close above so that you buy or below so that you sell. Once price is closed above with a full candle or two full candles, you can then take your buy trade. You can put your stop loss. Okay, that's basically what you see when you click that video that explains, but it is all explained in this text. So let's just go there and see if it still works. So this is WTI today. You could have marked that highest point on the Sydney session and then you mark the lowest point on the Sydney session. Okay, to set up this sessions indicator, it's explained again in that PDF. You just press this link. It's going to guide you step by step on how to set up this sessions indicator. So today you could have taken a sell trade when price closed below the key level there and you put your stop loss above that key level. So it's still going to play out. Let's just take what happened yesterday. So for yesterday, you could have had a very clean move. You could have marked that key level and then that key level. So when price closed above there, you could have taken a buy trade. Okay, so let's go back the day before that. You could have marked that highest point on Sydney and then that lowest point on Sydney. When price closed above there, okay, you could have taken a buy trade. So if you had this PDF some weeks ago, okay, you could have been making money all along. This was a bad day, but right here you could have had a good trade, okay, because price closed above. Okay, price closed above and you had those that move. Let's just pick maybe another pair. If, okay, let's say you jump at the market and it's no longer 8 a.m., it's around 9 a.m. What you look for is maybe the entry on GBP CHF, which is from the beginning of the London session. Again, you scroll down on GBP CHF there, mark first candle of London and first key level. So basically, I won't go to the video this time. Let's jump to GBP CHF, okay, and then let's go to the settings of the indicator and include the London session and press OK. So for today, based on that strategy, what you do is you mark the first candle of the London session. There was the first candle, and then you mark the first key level. The first key level should be the first turning point. Right here, price went down and then pulled up, giving us this lowest point as the first key level. Okay, so you could have had a buy trade there. Let me check how many pips this has given you. So far you are at 13 pips. Okay, so you should have hit your first TP, because based on this PDF, TP1 should be at 10 pips, TP2 20 pips, TP3 at 30 pips. Let's just check what happened on the previous day. Okay, so what you do is you just mark the first candle as your first key level, like that. Okay, so that's your first key level, and then the first key level or turning point was that. Okay, so this was wide, but price ended up closing below there, so you could have taken a sell trade, late entry. But you know what, I'm going to update these PDFs because right now I want to focus on just the first candle. Okay, so there's going to be the third version of this PDF. So we'll just focus on the first candle. If price closes above, we take a buy trade, because marking 2 key levels gives us late entries, and I've started sharing videos on that. That's what we're going to be doing. For example, right here, you're going to just mark your first candle, and then if price closes above, you take a buy trade. Okay, so for the stop loss, you can then identify areas like these ones. Okay, there, and then you hold. Right, you're going to see it on the third version of the PDF. I'm just improving it day by day. So right here, what you are gonna do is, okay, remember the old strategy. You mark the first candle as your first key level, and then you wait for the first turning point as your second key level. So if price closes above there, you take a buy trade. But on the third version, what I'm going to do is eliminate this. Okay, I'm going to eliminate this, and I'm going to be finding entries there or there when price closes above this first key level. Okay, so we're going to have greater moves. We will have greater moves. I will then even have to update the pips right here in terms of TP1, TP2, and TP3. So that's what I'm going to do. Okay, I believe it's going to work. I believe it's going to work. And for those who still do not have even the first PDF, you really need these traders. You really need these. So right here, that would be your first key level. So when price closes below somewhere there, you take a sell trade, because another thing that you need to know is true breakouts. If this is a key level and then you see price closing on a candle, let's say this is the first candle to close above that key level. Let me draw the wick. That's the wick. If there is a breakout like this, what you need to wait for is the second candle. If the second candle is somewhat equal to the first candle or lower than the first candle, that's not a real breakout. What you need to see is the second candle being a bit longer than the first one. This is a true breakout. Right here, you do not have a true breakout. Let me just show you. The candles right there are just equal in size. Okay, so it's not a breakout. Right there, it's wicks. Right there, the second candle, which is the bearish one, is not longer than the first one, so it's not a breakout. A breakout can be seen somewhere there. You have that red candle being that second red candle is longer than that first one. Okay, another true breakout is right there. This one is a clean one. So when this candle closed, you could have taken a sell trade, and then you put your stop loss above. You see that wick. Don't make your stops tight, okay, because you might be taken out even on a good move. So this would be the right place to sell, and then you have your profits. Okay, so if you want this PDF, you can text me, and then you will see the greeting message contains the information on how to get this PDF. Okay, there's a lot of currency pairs on that PDF, just that I won't show everything because people have paid for this PDF. It wouldn't be fair on them. On another note, I am still considering doing that mentorship videos, but I will update you on how to get them. For today, have a wonderful week, have a wonderful trading.